Thank you, Michael Masterson, who is the principal of Intrinsica, a global intrinsic and intangible asset advisory, valuation, and corporate finance specialist that helps many companies unlock their competitive advantage by identifying value and monetizing their intrinsic assets. You are known as the world's top IP strategist. I'm so glad to have you here, Michael. Michael's been helping and supporting CapTech since its inception in 2022, and he joined us again this year in 2024 with a plethora of knowledge to share for our guests, which we'll talk about later in this interview. But thank you, Michael, for joining us all the way from Auckland.
No, thanks for the opportunity, Sarah, and it's a real pleasure to be able to support you, Rahman, and the team. And it's a fantastic initiative. And as I said to Rahman, I wasn't quite sure if he could pull off the first year of CapTech, and no one was more surprised or impressed that what a fantastic event that you guys put on. And I was genuinely disappointed that I wasn't able to be involved last year, so I can't wait to be involved this year. So thank you again for the opportunity.
Oh my gosh, it's amazing. Well, while we're on the subject, usually we do it at the end, but we can do it now. Why should someone attend CapTech?
Oh, look, great question. The food was great the first year round. So I don't know what the catering's like this year. The coffee was pretty good. Biscuits were fantastic. I think we even had scones. No. Look,
I'm pretty sure you had the private dinner with Andrew Stone at the show.
That was, yeah, I thought that was a secret. I wasn't sure if I was allowed to talk about that. Hopefully I get another invite this year. Look, it really is, any opportunity where you can be around people, and in my experience, everyone's always smarter than me, so I love it, because you always learn something. I think, one of the things that I've learned is the older I get, the more I realize I don't know. And so if you're not engaging with your network and building and creating, and more importantly, feeding your network, then to be honest, you're going backwards. And I think, for me, if I go to an event like that, obviously there's, a financial investment, but it's mostly a time investment. So I think if you're going to go to CapTech, it really is what you put in is what you will get out. And I think Rahman's the exemplar of that. I mean, that guy works a room, he really is impressive to watch. And again, you're full of people that are either in the process of trying to make it or have made it. And so the opportunity to have that coffee, that scone, that dinner, whatever it is, or hear them speak about their experiences and their war stories. Yeah, it's not often that a group like this gets together. And I got to say, again, it's a compliment to you, Rahman, and the team as being able to pull this ecosystem together.
Yeah, and it's a global ecosystem. So we're already doing work and reaching out to our networks overseas. We had an event last week where we had people from overseas attend, and we're expecting more entourage coming from India, Hong Kong, and other European countries, which are in conversations right now. So it's pretty exciting to get
New Zealand,
global investors in the room. I do need to check if we've got scones, though. I don't know if that's something we thought about. But just so everyone knows, what the event summit looks like is we open up at New South Wales Parliament House, where all our speakers and amazing partners join us. And then Tuesday we have at the ICC in Darling Harbour, Sydney, where we have amazing opportunities to talk. We'll see Michael Masterson on stage at one of our capital markets sessions. And then that evening we have networking and drinks and melding together of the quality in the room of the people that are attending is amazing. And then on Wednesday, we have the beginning of our 2-day business matching sessions, which will be launching with Intrinsica, Michael Masterson, training people about what we're just about to talk about, which is IP strategies for businesses and investment.
Awesome. Or even better than IP strategy, I might even cover intrinsic asset strategy, which is like IP on steroids. So, but look, and I think it's great timing, Sarah, because, one of the case studies I think you've heard me talk about is AirTrunk, Robin Cooter, who, I met Robin, 2015, everyone told him he was basically uninvestable. He'd never raised $1. And I had a little bit to do with it at the start. If you want to hear more, come to that session. I'll tell you the whole story, the story that certainly most people don't know. He exited last week for $24 billion.
Not too shabby.
So if you think that intrinsic asset, IP, intangible asset, whatever you want to call it, if you don't think this stuff's important, I can assure you that if Robin hadn't listened to me, there would have been no AirTrunk. And that's because he wouldn't have been able to raise capital.
Yeah.
Because capital chases growth, and the key to growth, it's not your tangible assets, I can assure you. It's therefore your intrinsic assets. And if you don't know what they are and you haven't dealt with the risks and you don't have a strategy to grow them, good luck.
Actually, I'd love this part of an article you recently wrote for the AICD, if I've got that acronym correct. And you said your intrinsic assets come in many forms. In Google, it's the trade secret for their search algorithms. For Apple, it's their design. And Coca-Cola, it's their brand, because you never hear anyone order a bourbon and Pepsi. And I think for someone that doesn't really understand it, that to me, that makes it really clear what an intrinsic asset is. But I guess from now, how does someone work with you or, within their business to understand what their assets are that they need to be identifying?
Well, if you're at CapTech, it literally involves, if it's before midday, buying me a coffee. If it's after midday, another kind of beverage, or a scone if you can find one.
Espresso martini, right?
Absolutely. So it really just starts with a conversation, and whether it's myself or Stephen Harrison's going to be there as well, who's, we're very, very, very lucky to have as our exec chair. I mean, meeting me is a bit of bad luck, but that's fine. But if you get to meet Stephen, he really is pretty amazing. To take Noble Oak, from an idea 7 years ago to now 155 mil market cap is phenomenal. And it was Baron Joey's first IPO, and wow, Baron Joey would have been a different organization if Stephen didn't pull that off. So it really just starts with the conversation. And, look, I tend to be pretty direct with people because, wasting money is one thing, but wasting your time is a whole nother thing, because you normally can get money back.
Yeah.
We've all made bad investments. You normally hope the next horse crosses the finish line first.
And I always think of it, you always learn something, even if you've wasted some money or you've, blown up a business, it's a lesson.
Yeah, look, it's funny. We're having this conversation. I was with some very active high-end investors last week. And one of the things we were talking about is, and we actually all agreed on this, is pretty much none of us would invest in someone unless they'd failed before or they'd had a success. And more importantly, they knew why they had the success. And look, I think in fairness, a lot of people are lucky. I mean, there's a lot of businesses out there, and good on them, that have made a lot of money because they are in the right place at the right time with the right idea. Good on them. But it wasn't as planned as a lot of people think. And, I remember a US VC, Scott Nolan, who runs Peter Thiel's fund, said to me, he said, Michael, moonshots are luck. No one can ever pick a moonshot. And I completely agree with him. Look, and going back to AirTrunk, I knew AirTrunk was going to be absolutely $1 billion company. I had no doubt. I remember saying that to Robin. I had no idea it would be a $24 billion company. And that's an absolute credit to Robin executing. And that's the thing, people like me and others, we can give you that advice from the battlefield. And that's very much how our perspective is, what did we see actually work on the battlefield? Not what we read in a book or heard a lecture theatre. But you as a founder, and, I've been a founder and grown, companies and scaled them. You've got to be able to execute. And the one thing I can tell you, you don't do that by yourself. You've got to build a team that are way smarter around you, and then be able to collaborate and have a culture of dissonance where you can disagree in a really respectful way, and have fun while you're doing it. We had this conversation in Intrinsic just yesterday. We were arguing about something, and then we all just started laughing and went, isn't this great fun? Like, we would all come to work if we didn't get paid. And as they say, you never work a day in your life if you love what you do.
That's true. And I think that's the benefit of coming to things like CapTech, because people are there, they're passionate about what they do. Nobody's in here, obviously there is money involved, but it's not about being paid. It's not often, it's about those accomplishments, it's those success stories. It's trying to achieve something. And sometimes it's as simple as just economics. And that's the goal. But look,
Yeah.
Investors use intrinsic value to determine whether something is investable, whether it's undervalued or overvalued. And sorry, that's how they would obviously then offer a price or determine where they want to sit in their offer. So tell me a little bit about that and your experience.
Yeah, look, in great segue, because I was just about to say, I have a couple of frustrations, especially when I see an IM, and thinking back to the pitch sessions that I did at CapTech in the first year, and myself and Stephen kept asking the same question, and we've now turned this into our standard 4 questions that Stephen and I both look for when we're looking at an IM or any company that's wanting investment. And the 4 questions, no one's given me a 5th yet, which is really interesting. But in my experience, I've read probably a couple of thousand IMs. Stephen's probably read 100,000 because he's been around for forever. But number 1 question, and don't laugh, it's normally by about page 4, 5, maybe 25. What do you do? Like just a really simple statement. We do this. Like question, what do you do? We do this. Second question, who are your customers? In other words, why are you going to be able to generate revenue? Who's going to buy from you? The third question, Stephen and I reckon we might see in about 10% of the IMs that which is pretty bad. And often it's scattered through the document. It's not concise. So again, the third thing you have is how am I as an investor going to make a better return on my capital from you than from the other person whose I am about to go and read? The last question, though, is the most important question. And in my experience, I'd be lucky to have seen this tripped over in a few IMs. Now, by the way, sometimes this is covered by a very standard statement, which I'll get to, but it's how are you going to stop or slow down your competitors trying to replicate what you're doing? And by the way, saying we have a pattern, that is not an answer. In fact, that's probably sometimes even worse than saying I don't know. In fact, even if you said I don't know, at least is honest. Because people like myself or probably the investor can connect you to someone like me and we can have that conversation. So they are my 4. What do you do? Who are your customers? How are you going to generate a better return on capital? And 4, how are you going to stop or slow down a competitor? So if you can do those 4 things, I can tell you now, you probably, in fairness, won't have trouble raising a lot of money. Because if you think about it, if you can do those 4 things, you're AirTrunk.
Yeah.
Because Robin could do that on the first phone call with me. He was able to explain. Now we've got a better at articulating those 4 questions, and those 4 questions, in my humble opinion, should be the first or the second page after your disclaimers of your IM. And just keep it simple. Most people overcomplicate it. And so a lot of what we're doing when we're talking about intrinsic assets, and all intrinsic assets are what makes you special. Why, is SIPBN and CapTech the event to go to over other events that are trying to do a similar thing? And it's because of the intrinsic assets. It's not because it's at the ICC, maybe, Central, but it's because of the networks and the relationships and the knowledge and the know-how that, you and Rahman are able to bring together in one room. And, it's a pretty cheap investment, really, when you think you get access to those sort of people, for a couple of days.
Yeah. Well, we always measure our KPIs. It's not about the number of people in the room or where the people have come from. We want to see deals done. We want, we're all here to collaborate, do deals, potentially make money. That, sometimes it's strategic partnerships. There's other ways of, getting benefit. But for us, it's about the energy that all brings. And I think every single person that's on our team brings that same level of energy. And it's just terrific, and it attracts more people like that. So you're right, it is quite inexpensive to come and be a part of the people that are going to be there. Yeah, and
the one that really impressed me, because he's a friend and been a great supporter over the years, is Rod McGeoch. I mean, what a legend to have in a room. I mean, the guy brought the Olympics to Australia.
And now he brings CapTech to you.
Yeah, and
for anyone that's listening, Rod McGeoch is the gentleman who was behind bringing Olympics to Australia in Sydney, and doing it in other countries as well. So he's, got some great IP around his knowledge of bringing Olympics to countries. And he's also the SIPBN, which is the organisation behind CapTech. He's their chair.
Yeah, and he was on the board of Rams. He's still the chair of Chubb, Emeritus Chairman of Cause. I mean, he's a really nice guy. He's the guy to have a beer with, and all I would say though is think about what you want to ask people like that, or Stephen. There's some pretty amazing people in the room. What I wouldn't do is pitch them. That's not, in fact. Ralph Norris gave me some of the best advice I've ever had, which is if you want money, ask for advice. If you want advice, ask for money. So
Oh,
ask Rod and Stephen for their advice, and who knows. But again, cover those 4 things when you're talking to people. Be able to explain those 4 things, no more than 30 seconds, ideally 10 seconds. The best presentations I've seen are 10 seconds.
yeah.
And after that 10 seconds, you're like, I want to invest in that.
That's awesome. That's awesome. Look, a lot of our pitches we do run for only 5 minutes. And for a lot of people, they freak out and think, oh, how can I get my message across? But you'd be amazed the amount of information that you can, that's concise, that you put in that 5 minutes. But it also leaves the audience wanting more. So you're not boring them to death with the technical aspect of your product, which is what happens if you have more time generally. You're really concise. You've just lost a light by the looks of it.
Oh, it's those light movement activator. I'm obviously not moving enough, but at least that's something.
It's a stepping, you're not moving. We'll give you heart to heart. Yeah, so it's a stepping stone to getting that conversation. So again, asking for advice. Yes, you do need to include an ask, and generally that is a fundable ask, but it is about what's that next step? How can you engage with those people that you're pitching to?
And again, I mean this so sincerely. You answer those 4 questions, you're not going to have problems raising money. But then what you've got to do, you'll get your first round away if you can cover those 4. You've then got to generate growth. The reason that AirTrunk exited for 24 billion is because Robin was able to grow that business. He was able to deliver on that initial pitch, but most importantly, he was able to convert that into margin and market share, which is how he generated the return on capital. I know it sounds really easy. The execution's not so easy, but getting that raison d'etre, why do you exist? That is relatively easy. And that's what I'd spend the time on. Before you come to CapTech, I'm imploring you, you've got a room full of people who can invest, but they will only invest if you can really answer those 4. And, I would challenge you, if you do a great pitch on those 4 and you don't get investment, please come and see me, because you're missing something.
Yeah, yeah. And often it's just something so simple about being clear about something. And actually on that, leading up to CapTech, we will be holding AMA series so that people can come and ask questions. And if you want to come on one of those segments and do your 4, happy for you to do that. We'll critique you before the event, because like I said, our goal is to make it successful. So if that means you getting funding, then we are happy.
Yeah. But again, you've got to convert that capital into growth. Don't be the person who goes out, blows $1 million or more. I've seen lots of these, and they've got nothing to show for it. You're not going to raise a second time. If you do, it'll be on a down round, and most people don't survive a down round. So again, I'm giving you 35 years of battlefield experience, and having worked with literally thousands of companies, and the ones that raise, that's one thing, but those that continue to raise, it's because they're growing, they're executing.
Yeah, executing is very important. And so I guess what are some of the things that you see that need to be executed well for that success?
The first, or actually probably one of the biggest mistakes, is not actually understanding. I know it sounds really obvious, but what makes you special? Whether you want to, put in a framework of intrinsic assets makes it easier, because the number of times I hear people say, hey, I really like the idea, I really like the team, but I don't really know what I was investing in. And that's not good. That means that you haven't really explained to them. And at that point, investors don't really know what to do. And that's where they'll normally be very polite to you and say, hey, look, come back and see me at the next stage, etc., which is basically saying, I don't know what you do. It's a polite way of saying, leave. But again, once you know what you've got, then you've actually then got to work out what the right commercialization strategy is. And the other mistake we often find is people doing what we call deployment. So it's where you try and scale up by hiring more people, going into new markets. Essentially, you're taking your capital and you're doing something with it. But the other options that are available to you is licensing, where you take that capital and actually someone else goes off and they deploy, but they pay you a royalty. Or the third option is where in particular markets you're not planning on going to, or segments you're not going to, is where someone else will do that on your behalf, and they'll give you, a nice check to start off with. And look, we're working with a company that I can't talk about at this year's CapTech. I don't think so. Maybe next year's CapTech, definitely, where, they've come up with a really unique product, and there are 3 massive global players in that space, and we're creating essentially an option where they will all be bidding for that particular product because it gives them such a massive competitive advantage. Now, when you're in that kind of environment, trying to deploy against three of the world's biggest players, you can have, the best secret sauce on the planet, but you're just not going to win. They will starve you of capital and distribution. So that's where, again, getting the right commercialization strategy is, again, another massive mistake we see, especially in biotech and medtech.
Definitely. So can you share one tip or secret from AirTrunk? What did they do well?
Yeah, that's an easy answer. They kept a trade secret. People today still don't know how AirTrunk do what they do, and that's an absolute credit to Robin for taking our advice not to patent what he was doing. We told him he had to keep it as a trade secret, and they did that exceptionally well. So this is the thing, there are multiple tools in the toolbox, and a bit like you don't use a hammer to put a screw in, clearly. Well, you might do it once, but I wouldn't hang anything on it. It's about understanding that there's lots of tools at your disposal. And look, patents are the way I think of a patent is they're like a really fine screwdriver. If I need to just tighten up my glasses, that's what I need. But actually, I can't really do much else with that really fine screwdriver. And that to me is where patents sit. Patents are typically applicable 1% of the time, not 99% of the time.
I love that. That is so true. And I think people don't realize what the results are a patent, in the sense that your secret is actually out there. It's just technically, but then it's not copied, but you've got to be able to defend it too.
Well, and enforce it, which was the issue that we pointed out to Robin, is that no judge was going to give, AirTrunk and Robin access to Google and Amazon's data center. I mean, never going to happen. So it was really obvious. I mean, that was the first phone call I had with Rob. Like literally the first phone call. I'm like, how are you going to protect this? He's like, I went and saw a patent attorney. I'm like, Robin, don't do that, please. If we never talk again, please do not patent. Keep it a secret.
Very good. Very good. Well, I love that. And that's amazing advice. And I think, you don't get that kind of advice everywhere, but you can get it at CapTech when you meet with Michael Masterson and Intrinsica. They'll be presenting for those that choose to buy Summit passes on the Wednesday, which is our extra special event that's happening. And so I'd love to see you all there. So thank you for sharing some valuable insights, Michael. I'm really looking forward to the 4 days we're going to spend in Sydney at CapTech. To our listeners, stay tuned for our next episode of Deal Flow. Don't forget to join SIPBN and participate in our upcoming networking events. And for more opportunities to connect and grow, and come to sipbn.com.au and follow us on social media.